If you've been paying attention to the stock market lately, you'll notice one thing: high volatility, lots of swings up and down in the market. And what does that mean for option traders? Yep, profits. Now I know what you're thinking. Options are risky. You can lose a lot of money trading options. Well, yeah, you can. However, in this video, I'm going to show you exactly how to do it safely and make huge profits utilizing a strategy that will allow you to profit on the high volatility in US steel. Whether you're a beginner or an experienced trader, be sure and watch this video until the end. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Remember to hit like and subscribe. Let's get this video out to as many people as possible. All right, let's start off by talking about what implied volatility is. Well, think of it like insurance and premiums. The higher the premiums, the higher the risk. And same thing goes with options. Options pricing is based upon how much the stock price is expected to move in a given period of time. So the higher the movement, the more in premiums that you can collect if you're selling options. And if you're buying options, the more it will cost. So the option pricing is higher in high implied volatility. In this video, we're going to take a look at US Steel. US Steel is a company that's highly influenced by external factors such as geopolitical issues, and yeah, we have some of those going on, and commodity pricing. All right, so let's cover the basics. When you sell an option, whether it's a call or a put, you're essentially taking on the obligation to buy or sell the underlying stock if the option is exercised. In exchange for that risk, you collect a premium from the buyer of the option. Now that we understand the dynamics of selling options, let's set up a trade in US Steel and capitalize on the high volatility that it has right now. We're going to sell a strangle in high volatility and collect big profits. A strangle involves selling both a call option and a put option on the same stock with different strike prices, but in the same expiration date. The goal: you're betting that the stock will stay within a certain range, and you're collecting premiums from both the call and the put options that you sell. All right, guys, we're on the Tasty Trade option trading platform. There's a link down below. Check it out. There's benefits if you join through the link. Tasty Trade is great for selling and buying options for option trading. I've also got a link to Moomoo down there. I use both and love them both for trading options. So if we punch in right here in the upper left, X for US Steel, we see United States Steel Corporation, we see the current price is $41.84. And we talked about the high implied volatility. We actually don't have earnings coming up at all. So no earnings, and the IVR is very high. It's 93. That's, out of this world. It's very high, so we can collect good premiums. I'm in the regular option chains that expire the third Friday of every month. And again, there's regular here, and they have more volume, or there's weekly as well. But we're going to stick in the regular and the third Friday of every month. We're going to go out. I like to go 30 to 45 days to expiration. Then I can trade and roll 12 times a year and collect premium. So this is 29 days to expiration. We're going to click on the December 2024 chain, open that up, and we're going to sell a strangle. So puts are on the right, calls are on the left. If we're going to sell, we're on this first column, and we're going to look at around the 25 delta on the sell side. Actually, we're at 42 basically price right now. And if you look on the chart, you can see we've been staying between 35 and 45 way back since March of this year. We dipped down a little bit lower. On the RSI, we're right in the middle. So we've been trading in a range. So I like actually from 35 to 45, but let's take a look again at what we've got. So the 35 is at the 23 delta. I actually like the 36 at the 26. And then on the call side, let's go out to, let's see, the 48. So 48 and 36. That gives us $5.18 in credit that we receive the minute we hit review and send and place this trade. And remember, one option contract controls 100 shares of stock. So that's really $5.18 times 100. So it's $518. And that's our max profit. Now, if we go to the curve mode, we can see where we are profitable as long as we stay between the 36 short put and the 48 call. We collect that max profit. It's already deposited in our account, but we keep it, $518. And we just need it to stay within this range in the next 29 days. We're actually, because we're collecting this premium, it adds to our position on the bottom and the top. It gives us more room to break even. So we're break even all the way down to 30 and up to 53. And again, look at that chart. That takes us way down here. That's even below where it was here. 30 and what was the other one? 53. Way up here. So it's never even hit that in the last year. So to me, because the IVR is so high, this is a no-brainer trade right now. We hit review and send and we make 500 bucks. Nothing wrong with making 500 bucks a month. All right, let's talk about risk management, managing your trade and maximizing your profits. One of the best ways to manage risk is by using stop loss orders. These are automated orders that close out your position if the stock moves too far against you. If IV or implied volatility drops, US Steel may make a big move in your favor. You might want to buy back your options early and just lock in the profits. And lastly, you can roll the untested side and collect more premium. So if the stock price moves up and gets near or at your call strike, you can roll the put position up and collect additional premium. By the way, if you'd like to receive my free option strategy trading guide covering all the different strategies and management, then comment options guide down below and I'll send you the link. All right, guys, that's a wrap now. If you have any questions, let me know in the comments below. Are you trading US Steel? Are you selling strangles in this high implied volatility? Let me know. Also, be sure and download the free options workshop in the link below. Remember to like and subscribe. Ask a question, comment. I answer every question. Thanks for watching. I'll see you in the next video.
Steel, an essential manufacturing material of the modern world, an essential part of America's economy, and more. It's a part of our lives, shaping the world we live in. Steel provides the strength and durability needed to build products that are both safe and reliable. Join us on a journey to discover the essence of steel and how US Steel, a pioneer from its very inception, continues to drive progress, embodying the resilience and ingenuity that steel represents. Have you ever wondered what it takes to transform raw materials into the marvels of engineering that power our daily lives?